Have you ever wondered why some people seem to make money work for them, while others are trapped in a cycle of just working for money? What if just 90 days could completely change your financial trajectory? Today on From Books to Life, we re-diving into the mindset and strategies behind Robert Kiyosaki's Rich Dad Poor Dad mapping out. A 90-day financial transformation challenge that could reinvent how you handle money, earn, and invest. Whether you're struggling with debt, searching for your first side hustle, or wanting to start investing, but not sure how, this video breaks down practical steps inspired by one of the world's most influential finance books. If you're ready to turn knowledge into action for real growth, you're in the right place. Don't forget to leave a comment sharing your financial goals, and subscribe for more life-changing book lessons each week. Starting a journey toward complete financial reinvention is both exciting and challenging. The idea of taking an honest look at your finances on day 0 and envisioning who you could become by day 90 creates a powerful narrative of transformation. More than just numbers, this change involves habits, attitudes, and your overall relationship with money. The process begins with a clear assessment of your current situation, debts, income streams, spending patterns, all laid out for honest evaluation. The 90-day timeframe brings focus and urgency, turning financial goals into concrete and achievable actions. This initial evaluation phase is essential because it builds the foundation for all future changes. Before adopting new strategies or making lifestyle adjustments, understanding exactly where you stand allows you to measure real progress, celebrate small wins, and adjust your path when necessary. Facing past financial mistakes can be uncomfortable, but this honesty is the first step toward breaking out of stagnation. Having day 90 as a finish line turns the journey into something tangible with a clear and motivating goal. It makes the process less abstract and more practical, showing that meaningful transformation is possible within a short time frame. Beyond delivering financial results, the challenge acknowledges the complexity of money management. It's not about quick fixes, but about structured and intentional progress. The language emphasizes deep reinvention, suggesting a real shift in habits, beliefs, and strategies that will continue well beyond the 90 days. This plan creates fertile ground for growth, discipline, and reflection. The experience of going from day 0 to day 90 is more than a count, not need. A transformation designed to bring greater financial clarity, control, and confidence. With this solid foundation, the next step is to dive into how to organize your finances, negotiate debts, and develop habits that will sustain this new phase. Transitioning from the broad vision of financial reinvention, the first phase grounds this ambition in practical, actionable steps. The initial 30 days are dedicated to financial organization, critical foundation that sets the tone and pace for the entire transformation. This period hones in on clarity and control, emphasizing an honest assessment of the current situation followed by decisive cleanup actions. It's a process that demands both discipline and commitment, but it also empowers by replacing uncertainty with structured insight. Starting with a recommendation to download trusted personal finance apps like Mint, or you need a budget, speaks directly to today's tech-savvy American audience. These tools don't just track expenses. They provide real-time feedback, categorize spending, and deliver insights that can be eye-opening. The apps act as financial companions, turning what might seem like a chore into a more engaging, even empowering experience. By leveraging technology, participants tap into a modern approach that's accessible and tailored to everyday life. Listing all debts, whether it's revolving credit card balances or student and auto loans, is another pivotal task in this phase. Debt, especially in the US, often serves as a significant barrier to financial freedom. Yet writing them all down demystifies these obligations, turning a nebulous cloud of worry into quantifiable data. This transparency paints a detailed portrait of what needs attention, allowing you to allocate mental and financial resources strategically. It's in this inventory stage that the overwhelming starts to become manageable. Creating a monthly budget spreadsheet builds on this foundation, weaving together income, fixed costs, and discretionary spending into one coherent plan. Budgeting remains an underrated skill, but it's vital for establishing control. This step transforms abstract goals into daily realities, helping to track not just where money goes, but why. It invites a mindset shift where spending is no longer reactive, but intentional, aligned with longer-term objectives like debt reduction or savings growth. Cutting 3 unnecessary expenses early on is a tangible, direct action that yields immediate psychological and financial benefits. It's a small but powerful exercise in discipline that begins to chip away at lifestyle inflation, a common challenge in American households. Whether it's unused streaming services, frequent takeout, or impulse buys, identifying and eliminating wasteful spending reinforces the idea that financial reinvention requires trade-offs, not deprivation, but thoughtful choices that honor priorities. Finally, recommending Rich Dad, Poor Dad by Robert Kiyosaki provides a conceptual and motivational anchor for this phase. This book has become a touchstone in personal finance, challenging traditional beliefs about work, money, and investing. It nudges readers toward a mindset focused on financial education and entrepreneurship, which dovetails neatly with the practical steps undertaken in the first 30 days. Together, these tools and insights form a cohesive framework, one that prepares participants to move forward confidently into the next phase of the challenge. Building naturally on the foundation of assessment and cleanup, the focus during weeks 3 and 4 shifts toward negotiation and strategic planning. This phase moves beyond simply understanding your finances. It actively reshapes your financial landscape by addressing existing debt burdens and establishing the structures necessary for sustainable growth. The momentum gained from the first 2 weeks is now channeled into deliberate actions that foster control and resilience. Negotiating or refinancing debt represents a crucial turning point. For many Americans, high-interest credit card debt or personal loans can feel like a financial trap, steadily eroding monthly cash flow. Taking the initiative to contact creditors and explore options for lower interest rates or extended payment terms requires courage and persistence, yet often yields tangible results. In an environment where credit scores and interest rates can make or break financial stability, this step is both empowering and practical, demonstrating that debt isn't immovably, can be managed strategically. At the same time, setting up a detailed budget helps to anchor your financial planning in reality. While you may have created a basic budget in the earlier weeks, this iteration demands greater specificity and accountability. It incorporates the new debt arrangements and savings objectives, crafting a dynamic document that reflects the evolving picture of your finances. It demands regular engagement and tracking, reinforcing the discipline cultivated during Phase 1. This structured budget becomes a blueprint, illuminating where adjustments are possible and where discipline is most crucial. Establishing a clear savings goal energizes the process with purpose and direction. Unlike vague promises, a defined goal, whether it's the first $1,000 emergency fund or a buffer for upcoming expense, provides measurable motivation. It reflects a fundamental shift in mindset from living paycheck to paycheck toward prioritizing financial security. This goal setting is not merely an exercise in numbers, but an affirmation of self-discipline and foresight, acting as a protective shield against the unexpected. The emergency fund itself symbolizes a safety net, a foundational pillar of financial health often overlooked until a crisis happens. Starting with a $1,000 target is both realistic and psychologically manageable. It acknowledges that this is not about amassing wealth overnight, but about creating stability. It's a financial buffer that introduces peace of mind, reducing stress and providing real options when life inevitably throws curveballs. Finally, launching your first side hustle or gig injects a proactive and entrepreneurial spirit into the journey. This step represents the transition from managing existing resources to generating new income streams. It's a nod to the gig economy's growing role in American life, and a practical method for accelerating financial goals. whether it's freelancing, tutoring, or offering local services. This venture not only supplements income, but fosters skills, confidence, and a mindset open to opportunity. Together, these weeks crystallize the ongoing shift from survival to strategic growth, setting up the challenge for the next phase of income generation and investment. As we move into the second phase of this financial challenge, the spotlight naturally shifts toward vital complement to the organizational and planning work completed during the first month. Here, the effort transcends managing money to actively expanding its flow. This stage is about exploring opportunities to boost cash inflow without relying solely on traditional employment, which is especially relevant in today's evolving workforce landscape. It's a powerful pivot from constraint to possibility. Freelancing stands out as a prime avenue for many Americans seeking flexible, scalable income streams. Platforms like Fiverr, Upwork, and TaskRabbit democratize access to gig opportunities, aligning well with a variety of skill sets. Whether you are a graphic designer, an articulate content writer, or possess IT support expertise, these spaces enable you to monetize talents that might otherwise go untapped. The beauty of this approach lies not only in the financial rewards, but also in the autonomy it offers, empowering individuals to shape their own schedules and career trajectories. The goal of earning a minimum of $500 extra per month grounds this phase in achievable, motivating targets. It's a figure that is significant enough to impact savings or debt repayment plans, but remains realistically attainable without overwhelming daily responsibilities. This incremental boost is more than just supplemental income, can foster a mindset of growth, encourage resourcefulness, and provide a psychological buffer that diminishes the stress often associated with financial hardship. Alongside freelancing, selling unused items represents a pragmatic, almost cathartic, way to generate cash while streamlining your living space. Americans notoriously accumulate a surplus of possessions, many of which sit dormant in closets or garages. Marketplaces like eBay, Facebook Marketplace, and Poshmark offer accessible platforms for turning neglected belongings into liquid assets. This process not only declutters your environment, but also reinforces the principle that financial transformation can come from reimagining the value of what you already have. Local services amplify this entrepreneurial spirit by capitalizing on community needs. Tutoring, consulting, or weekend gigs like dog walking and handyman work bring income opportunities within easy reach and often low entry barriers. These roles also foster personal connections and can open doors to ongoing reliable work outside the digital marketplaces. They add a layer of diversity to income streams that can be particularly sustaining during economic fluctuations. Together, these strategies form a diverse, proactive approach to building financial resilience. Phase 2 encourages you to leverage your skills, possessions, and community in tandem, interweaving multiple income sources to create a more adaptable and empowered financial profile. As we continue this journey, it's clear that creating money isn't just about traditional jobs. It's about recognizing your unique assets and finding creative ways to put them to work. The groundwork is now laid for the final phase, investment and growth. With the momentum of income growth established, Phase 3 naturally shifts focus toward investment and long-term financial expansion. After organizing finances and creating additional income streams, the next logical step is to put that capital to work, harnessing the power of compounding and market participation. This phase embodies the transition from short-term survival to building lasting wealth, reminding us that true financial transformation includes both managing resources and strategically growing them. Opening a brokerage account is the gateway to this new chapter. Modern platforms like Robinhood, Fidelity, or Vanguard have lowered barriers that once limited access to investing, making it not only possible but accessible for everyday Americans to participate in the market. This democratization of investing is crucial because the earlier one begins, the greater the potential for growth through compound interest. For many, just opening an account marks a significant psychological milestone. It's a declaration that you're ready to take control of your financial future. Making the first investment, if it's as a modest amount, like $50, is more about taking the plunge than the dollar amount itself. This initial step breaks down the inertia and fear that often prevent people from entering the market. It's a practical affirmation that investing is within reach and sets the stage for ongoing participation. Taking action, regardless of size, cultivates confidence and builds familiarity with the investment process, which is essential for sustained engagement and learning. The suggested beginner portfolio allocations: 70% bonds or bond ETFs, 20% treasury bonds or fixed income, and 10% stocks or ETFs, deliberately conservative and thoughtfully diversified. This mix aims to balance stability and growth, reflecting a risk-averse but progressive approach that suits many new investors. Bonds and treasury securities offer relative safety and predictable returns, crucial for shielding a portfolio from market volatility, while the stock allocation provides the growth potential necessary to outpace inflation and build wealth. This structure also subtly reinforces the importance of education. Understanding the roles different asset classes play within a portfolio requires time and curiosity. And embracing this learning curve is part of the transformation journey. Investing is not just a mechanical exercise, but one that involves continual refinement of knowledge and strategy. It invites a mindset of patience and long-term thinking, where returns compound not overnight, but steadily, rewarding those who stay the course. As this phase unfolds, it highlights an essential truth: building wealth is as much about mindset as it is about money. The disciplined act of opening an account, making a first investment, and aligning your portfolio demonstrates readiness to embrace complexity and uncertainty with purpose. It shifts the narrative from financial survival to financial growth, blending careful stewardship with bold action. This sets the stage not only for improved financial health, but for a future defined by empowerment and possibility. Tracking progress stands as one of the most critical yet often overlooked elements in any financial transformation journey. Without clear metrics, it's easy to lose sight of the progress made and the distance still to travel. This framework for progress tracking invites a level of intentionality and reflection that enhances accountability and provides a measurable sense of advancement. It transforms abstract goals into concrete realities, allowing participants to see their evolving financial landscape in real time. By categorizing the key financial areas: debt, income, and investments, this system encompasses the core pillars of personal finance. Each category serves a distinct purpose and offers unique insights. Debt measures liabilities and how effectively those are being reduced. Income reveals not only the baseline, but also how additional revenue streams contribute to overall financial health. Investments show growth potential as assets accumulate and returns compound. Together, these categories tell a comprehensive story of financial progression. The simplicity of this structure is part of its power. Starting value provides the baseline snapshot, a reference point that grounds the entire process. Current value captures the present state, reflecting real-time outcomes of the actions taken throughout the challenge. The percentage change acts as a quick visual indicator of momentum, showing where significant gains or setbacks have occurred. This triad encourages consistent updates, fostering reflection and enabling adjustments that keep the challenge dynamic and responsive. Looking closely at debt tracking, this metric offers motivation by quantifying reduction, which can otherwise feel intangible. Watching the dollar amount decrease and the percentage drop grow creates a tangible sense of victory. For many, debt represents a heavy psychological and financial burden. Thus, witnessing progress in this area can have outsized emotional benefits, reinforcing perseverance and sustaining engagement. Income metrics illuminate the fruits of side hustles, salary changes, or other revenue-enhancing strategies introduced earlier. By separating base income from extra income, it highlights the impact of proactive efforts to earn beyond the day job. This nuanced view encourages diversifying income sources and underscores that, Financial stability is increasingly tied to adaptability and entrepreneurship. Investment tracking rounds out the picture by focusing on asset growth and returns. It reminds participants that while debt reduction and income generation are foundational, true financial reinvention includes wealth accumulation. Knowing the initial invested amount and watching the portfolio grow, even gradually, builds confidence and commitment. This comprehensive approach to tracking not only measures progress, but also shapes the mindset necessary for continued growth and resilience. As the tangible actions and numbers come into sharper focus, it's vital to remember that financial reinvention is equally a journey of mindset and mentality. The habits we cultivate in our thoughts and attitudes often dictate the sustainability of any progress made in dollars and cents. This psychological foundation supports every decision and strategy, reminding us that true transformation is rooted not just in what we do, but how we think about money and ourselves. The principle that consistency beats instant results is a powerful mindset shift. In an era dominated by quick fixes and viral success stories, the steady, persistent effort often gets overlooked. Yet financial health is built one day, one budget, one payment, and one investment at a time. This truth requires patience, resilience, and a commitment to progress even when visible wins feel distant. Embracing this mindset allows setbacks and slow days to be seen, not as failures, but as normal parts of a longer, meaningful journey. Acknowledging that making mistakes is part of growth frees us from the paralysis of perfectionism. Financial choices are complex, and no one can anticipate every consequence or market fluctuation. Mistakes are inevitable, and when treated as learning opportunities, become powerful catalysts for improvement. This mindset creates space for experimentation and reflection, so fear doesn't stifle action. Accepting imperfection cultivates courage, which is essential for taking those critical first steps and sustaining momentum. Small wins deserve special attention because they build the emotional and psychological momentum necessary to keep moving forward. Whether it's negotiating a lower interest rate, securing the first freelance client, or investing that initial $50, these achievements fuel motivation and reinforce belief in the process. Celebrating these milestones, however modest, transforms the abstract idea of financial reinvention into a series of meaningful, tangible accomplishments that propel you onward. Committing to ongoing financial education differentiates short-term change from lifelong mastery. The financial landscape continuously evolves, tax laws shift, new investment vehicles emerge, and economic cycles fluctuate. Remaining curious and dedicated to learning ensures you don't merely survive in this environment, but thrive. This intellectual flexibility deepens understanding, enhances decision-making, and builds confidence, ultimately allowing your financial strategies to adapt and grow over time. Together, these facets of mindset form the psychological engine driving sustainable change. They transform financial reinvention from a checklist of tasks to an evolving, empowering narrative of personal growth. By fostering consistency, embracing mistakes, valuing small wins, and committing to learning, you create a resilient foundation that supports not just your finances, but your overall well-being. This shift in mentality is a crucial piece of the puzzle as the challenges stages unfold, intertwining inner transformation with external progress. When we think about transforming our financial lives, the practical steps we take, budgeting, negotiating debt, or investing, are vital. However, what often separates lasting change from fleeting progress is the continuous commitment to learning and growing. This is where additional resources become a critical pillar of your journey, serving as both compass and companion as you navigate the complex world of personal finance. The value lies not just in the content, but in cultivating a mindset that seeks knowledge and connection beyond the immediate challenges. Podcasts have revolutionized how we consume information, making financial education accessible anytime, anywhere. Shows like The Dave Ramsey Show and Choose FI are more than just sources of tips. They introduce you to philosophies and narratives that reshape how you think about money. Dave Ramsey's no-nonsense approach to tackling debt resonates with many who feel overwhelmed by financial chaos, offering structured steps that break down daunting tasks into manageable actions. Meanwhile, Kiyosaki dives into the nuances of financial independence, encouraging listeners to rethink conventional wisdom about work, spending, and saving. These podcasts become daily rituals, embedding financial literacy into your routine in a way that feels natural and inspiring. Moving beyond audio, YouTube has emerged as a vibrant space for visual and engaging financial education. Creators like Graham Stephan and Andre Geek have built large, active communities by translating complex concepts into relatable stories and actionable advice. Graham Stephan, with his practical breakdowns of real estate investing and frugal living, connects with an audience hungry for real-world strategies they can apply immediately. Andre Geek's gentle, charismatic style demystifies the stock market, opening doors for beginners who might otherwise feel intimidated. What makes these channels especially powerful is their ability to combine education with personality, turning learning into a compelling narrative rather than a dry lecture. Community is another often underestimated ingredient in financial empowerment. Engaging with free online groups, whether through Reddit's or Personnel Finance, Facebook communities, or even Discord servers, creates dynamic spaces where knowledge, encouragement, and accountability converge. These communities reflect the diversity of real-life experiences, offering perspectives that help you avoid pitfalls and embrace innovative ideas. In a world where financial decisions can feel isolating, these peer connections remind you that you're not alone. Sharing goals, setbacks, and victories fosters resilience and creativity, nurturing your ability to adapt and persevere. On the more personalized side of this resource spectrum, free financial coaching and mentorship programs provide tailored guidance often unavailable through self-study, especially for those feeling stuck or overwhelmed. Having a mentor to guide you through specific challenges, whether that's debt management, credit repair, or investment planning, accelerate progress exponentially. Many local nonprofits, community groups, and even banks offer these services at low or no cost, democratizing access to expert advice. This direct human connection complements the self-directed learning from podcasts and videos by offering customized strategies and emotional support. Taken together, these additional resources extend the financial journey from a solitary challenge into a continuous learning adventure enriched by community and expert insight. They help sustain motivation, deepen understanding, and empower you to make smarter choices that align not only with your immediate goals, but with your evolving definition of financial freedom. Integrating these tools naturally into your daily life enhances the structured steps you've taken and opens doors to possibilities that were once out of reach. As we continue, this foundation of ongoing education and support will prove indispensable as you build toward lasting wealth and confidence. Building on the foundation of continual learning and community support, it's important to also remain vigilant about the warning signs that can derail even the most dedicated financial journeys. While enthusiasm and motivation are critical, unchecked behaviors or slipping discipline can quietly undermine progress. Recognizing these early signals isn't about self-judgment, but about fostering awareness and course correction, which are essential to sustaining momentum and ultimately achieving your goals. One of the clearest warning signs is consistently spending more than 20% over your budget. Budgets aren't designed to be restrictive cages, but realistic maps that guide your expenditures toward long-term goals. When spending regularly breaches this threshold, it signals a misalignment between intentions and actions, a red flag that can jeopardize debt reduction, savings, and investment strategies. This doesn't mean a single overspend is catastrophic, but a pattern indicates that a reevaluation of spending habits, possibly coupled with more stringent tracking or emotional awareness around money, is urgently needed. Similarly, missing weekly goals can be a subtle yet profound indicator of slipping focus or overcommitment. These goals, whether related to debt payments, side income generation, or investment contributions serve as milestones that keep the overall strategy grounded and achievable. Falling short repeatedly should prompt reflection on whether goals are realistic, if external circumstances need better management, or if motivation is flagging. Importantly, it also encourages a mindset shift from seeing setbacks as failures to understanding them as feedback opportunities to adapt and refine your plan. Skipping steps in the challenge reflects another form of warning that can erode progress. The structure of a financial challenge is deliberately sequential, each stage building on the last. Bypassing foundational actions, like not fully clarifying your budget before pursuing extra income streams, or neglecting to educate yourself on investments before diving in, can create gaps that undermine later gains. This warning nudges us to respect the process and trust in gradual, disciplined advancement, rather than rushing toward shortcuts that may prove costly in the long run. Understanding these warning signs naturally leads us to a final checklist set of clear, ambitious yet attainable targets that serve as the compass needles for your financial reinvention. Reducing debt by 30% anchors the journey in tangible debt relief, a transformative achievement that reshapes your financial landscape and opens up new possibilities. Creating your first steady side income shifts you from relying solely on one source of cash flow to embracing entrepreneurship and diversification. Fundamental steps toward financial security. Starting to invest, even with small amounts, ensures your money begins working for you rather than stagnating. This early investment habit fosters confidence and sets the stage for compounded growth, no matter how modest the initial step. Reading a key financial literacy book like Rich Dad Poor Dad expands your mindset by challenging traditional narratives about money and wealth, enriching your approach with proven perspectives. Finally, building a daily habit of financial tracking consolidates all these efforts, turning awareness into action and nurturing discipline that can carry you forward beyond this challenge. Together, these elements create a robust framework that weaves awareness, action, and learning into a cohesive financial transformation. Adding to the essentials already highlighted, a well-equipped survival kit becomes a crucial ally in navigating the often complex terrain of financial transformation. The right tools create both clarity and convenience, transforming abstract goals and intentions into concrete, manageable actions. Whether it's staying vigilant against overspending or tracking multiple income streams, having a curated set of digital resources and practical aids can make the difference between frustration and progress. Finance apps like Mint, You Need a Budget, and Personal Capital have revolutionized personal finance management by consolidating your financial life into a single, accessible platform. Mint offers simplicity in linking all your accounts and tracking spending with intuitive visuals. YNAB, on the other hand, is built around a proactive budget philosophy that encourages giving every dollar a specific job, reinforcing mindful spending and saving habits. Personal Capital specializes in investment tracking, providing insights that marry day-to-day budgeting with long-term wealth monitoring. Each app caters to different styles and needs, providing flexibility that aligns with your journey's stage and personal preferences. Often the power of organization lies not just in apps, but also in customizable templates that bring structure to budgeting without overcomplicating it. Budgeting spreadsheet templates hosted on platforms like Google Sheets or Excel offer an adaptable framework for those who prefer hands-on control. With these, you can tailor categories, track progress visually, and experiment with what-if scenarios, all while reinforcing habits of regular financial review. This approach creates a tangible sense of ownership directly tied to your unique financial goals and realities. Learning, as we've seen, is central to transforming finances, and accessible courses provide an excellent way to deepen your knowledge without overwhelming cost or complexity. Platforms like Coursera and Khan Academy offer free or low-cost classes on personal finance fundamentals, investing, and economics. These courses provide structured learning paths that can supplement the practical steps you retaking within the challenge. turning curiosity into expertise. The advantage of these resources is their ability to demystify often intimidating subjects at your own pace, empowering you to make informed decisions. Perhaps equally important is regular engagement with supportive online financial communities. These spaces, whether on Reddit, Facebook groups, or dedicated forums, offer a combination of emotional support, advice, and motivation that can transform the solitary task of financial management into a collaborative, uplifting experience. Knowing others share similar challenges and triumphs reduces isolation and fosters accountability, while collective wisdom often illuminates paths you might not have considered. Incorporating this bonus survival kit into your daily routine complements the foundation built through budgeting, income growth, and investing. It not only streamlines your financial practices, but also nurtures the learning and connection necessary for sustained change. With the right apps, organized tracking, structured education, and a supportive community, you set yourself up not just to survive financial challenges, but to thrive and evolve continually along this journey. Remember the lesson at the heart of Rich Dad, Poor Dad Dan? This 90-day challenge isn't about chasing quick wins, but about building financial habits and a mindset that last a lifetime. Consistency, education, and taking courageous small steps are your superpowers. Now it's your turn. Pick one action from today's challenge and start your transformation, no matter how small. Are you ready to write a new story with your money? Share your next step in the comments, like this video if you found it helpful, and subscribe to keep growing with our community. Want more practical wisdom from powerful books? Check out our other videos and keep moving from ideas to action. You've got this, and we're right here cheering you on at From Books to Life.